Hello, my name's David Miller and I'm the manager of Nexus Global Solutions portfolio and the co-manager of Dynamic. I'm speaking to you from London. It's the Courtachievate office and it's early March. Well, it's been quite a start to this year, 2018. This time last month, I was recording this message right in the middle of the setback that blew into markets at the beginning of the month. And I said at the time that I thought that it was a temporary matter. We kept our nerve, we did buy into the dip, and since then there's been a partial recovery. I'll explain why in a moment, but I think that is really what active fund management is all about. Making an assessment of what is going on, dealing with unexpected events, and trying to get the judgments right. So, what went wrong in early February that isn't wrong now? Well, there were a few statistics out of the US that suggested that inflation was on a rising trend, perhaps on a more rapidly rising trend than had previously been expected. That would have a knock-on effect on interest rate policy. Speculators using borrowed money had to sell, did sell, drove prices down in the short term. And those of us with real money, investors in these two portfolios, this is savings, real money, were able to step in and make some judgments, and that's what I think stabilised markets. Now, I'm not saying it's not all over, but that is where we are at the moment. In terms of asset allocation, both Solutions and Dynamic are as fully invested as they have been over the last year. So Dynamic is 97% invested in equities, with the rest in cash. Solutions is a diversified portfolio. So we have about 57% in equities, 28 or so in fixed interest, and the rest in alternatives. That's a balance that's been working for us since these portfolios were set up. In terms of performance, in February when markets were down, as you might expect, Dynamic was down a bit more than Solutions. We were both down, both portfolios down, but and this is just a coincidence, year to date, they're both about the same in a fall in value since the 1st of January of about 2%. So given the lurid headlines and the volatility of markets, I think that stability is something to be noted. We're there to make money for investors, but we are also there to protect value and capital during difficult times. Now, what next? I could talk about politics forever, but I'm not going to. Everybody has the same shopping list of worries. Things happen, Italian elections, German governments, new announcements out of the Trump administration, you name it. These things will continue to roll through the system this year. But I want to talk about economics and the companies that we're investing in. Economic growth around the world is good. It is now looking at about 3% for this year. It's not accelerating anymore, but that's a very good number to be able to invest against. Companies are delivering profits growth for 2017. They're telling us about it now. On average in the US, earnings are up about 15%, 1.5. These are good numbers, and this is what we're focusing on. And this is what has driven markets over the last year or so, and is continuing to drive markets now. It's about implementation. We're investing in companies that are delivering profits growth, paying dividends, buying back shares. Interestingly, during February, when things were a bit uncertain, it was the growth companies that came back into fashion. Apple, Amazon, Netflix, all produced excellent numbers for the portfolios over the last 4 weeks. And in financials, a whole range of banks and other companies in that sector have done well. Really, I think responding to good economic numbers, possibility of slightly higher interest rates, a chance to rebuild margins. This is all what I would describe as business as usual. And I think the message I want to leave you with today is that that's how we're managing the money. We're analysing what we can analyse, companies that we're investing in, the investments in other areas that we select. That's what matters. That is what matters. If we have to face up to political change that actually has a wash through into the financial world, then we'll be able to do something about it because the portfolios are invested in liquid, easily, readily realisable securities. Another foundation stone of what's proving to be a good way of managing money in the current world and current environment. So I hope these comments have been useful, and I look forward to reporting to you again in a month's time. Thank you.